Welcome to our next video lesson working with Vocational Rehabilitation, a business perspective, and this one's on startup costs. And I know you were probably waiting for this one, so let's jump right into it. The first thing I want to do is I want to establish the different types of startup costs that there are. There's different categories, if you will. The first type is called hard costs, equipment, computers. They're typically assets or things that are tangible and lasting. Soft costs will be licenses, professional fees. They'll typically be association memberships or subscriptions and so forth, attorney fees for setting up an LLC. These are what's called soft costs. They'll be one-time expenses, maybe your insurance for the first month or first year. And then there's this type of startup cost called working capital, and that's a really important one. If you remember that big picture video lesson, I talked about there's a period of time that it takes for a business to reach the break-even point. Well, where is that money going to come from that's going to pay for the bills? This is where it's going to come from. There typically has to be some sort of outside pool of money that's going to keep things going until the business can stand up on its own, and we call that working capital. So as I go through this, I want you to think about those three types of startup costs, and I'll talk about those more here in a minute. The general rule for working capital that I want you to keep in mind is that if you're asking for money from VR and it's under $10,000, you probably need about 2 to 6 months worth of working capital to get to your break even. Really, there's a rule of thumb that says get twice as much as you think you're going to need. It's just, erring on the side of caution, but the typical, if a well-organized, typical startup for a service business is about 6 months. So if you got 6 months worth of working capital, enough to pay all your bills, you should be able to keep things going smoothly for that period of time. A business that's over 10,000, and this is not a hard rule, this is a general one, but a business that's over 10,000 in terms of startup capital is probably going to need 4 to 12 months of working capital. And it just means that the amount of investment and the time it takes to get that business, those wheels turning, takes longer. So these are general rules of thumb, but you can just distill it down to say under 10,000, you want 6 months worth of working capital. And if you're over 10, you want to double that. Okay, so let's get to the things that Voc Rehab cannot fund. And I'm not going to spend a lot of time on these, but I'm just going to run through the list. First of all, they will not fund a risky business. That shouldn't be any surprise. They will not fund a hobby business. So what a hobby business is versus a real business is a hobby business may not get a profit year after year. Hobby businesses may take a loss, and the reason is that the owner doesn't care. They just like what they're doing. A real business has to sustain itself, and that's part of the goal, is that it makes a profit. VR will not make real estate purchases. Related to that, they will not purchase a building. An important one, they will not refinance existing debt. And this is also part of the process. If you've incurred a debt and you want VR to reimburse you for this while they're working with you, it's not going to happen. They do not refinance existing debt. They do not pay salaries. They don't get into that. They do not make loans. They don't do loans of any type. They do not purchase a vehicle, though talk to your counselor about this one. There have been limited exceptions, and it's mostly been around disability-related issues. But I think it's a pretty good bet that they're not going to buy you a car for business. They won't fund a startup, or a nonprofit startup rather. Only for-profit startups are allowed. They will not allow you to purchase a franchise. And they do not give you cash. Circle that one. Everything is going to be in the form of a payment directly to some vendor, but they do not give you cash at all. Okay? And then the last thing is they do not give you ongoing operational costs. They may provide up to 3 months on a prepaid purchase, and it's going to be case by case. So remember those three types of startup costs that I mentioned a while ago. This is where I think working capital becomes a real challenge for a startup working with VR, but I'm going to talk about that a little bit more here in a minute. What can they commonly do? So we kind of ruled out what they do. Here's the things that we typically see. We'll typically see businesses, business-related tools and equipment. It could be a sander, grinder if you're a carpenter, or if you're into building. It could be a laser-sighted guide if you're doing surveys. I mean, it just depends. If you're a graphic designer, it could be a computer that you need to do that work. But related to the business that you're working in, they'll do raw material, business licenses and fees. They'll help with phone and internet. They'll help with legal fees, setting up a corporation, and so forth. Now, again, these are limited on the legal fees. They're not going to do everything. If you've got a legal challenge or something like that, they're not going to do it. But if to help you form a corporation or to get advice to learn how to do agreements or something, they may do that. They'll help you to do some advertising. They'll help you to get office supplies. Again, as I've mentioned, they'll help you with professional services. They'll help you with computers and softwares. They'll really like to help you with business and technical training. So if you've got gaps, and everybody does, in their understanding of how you do business or how to produce your product or service better, they're certainly interested in that. And as I mentioned before, they may do 3 months worth of prepaid operational expenses. And again, that is case by case. That is not a promise. So you have to ask your counselor to see. And I think in the big picture is, once you have a good sense of what your startup costs are going to be, I think the most prudent thing you could do is talk to your counselor and say, look, this is where I think things are. What do you think? Do you think that these are allowed by policy? I think that's a great use of time. They'll also pay for initial inventory. So with those lists in mind, I think this is where what I call the working capital challenge comes into play. Vocational rehabilitation does not give you cash to pay your ongoing expenses month per month while you're starting a business. You are going to need to have this from someplace else. Either you have got the money to invest, or you've got somebody else that's willing to invest in your business to give this to you. But somehow you're going to have this ability to pay the bills while your business is reaching for that break-even point. And that's what I call the working capital challenge. So take advantage of the fact that they might do 3 months worth, but anything beyond that, you're going to have to come up with. So that brings us to other sources of capital, which by policy, VR does not want to be the sole provider of funds to your business. Here are some places that you might look. And I used to run a microenterprise nonprofit, so I knew places around the state, and still know a few, of where people could get funds and how you could make this happen. So here's my initial thought of where you can look. First of all, put in your own money. Put in your own sweat equity, your time into your business. But if you got some ability to put in some money to buy some things, that really goes a long ways to helping with the startup and to build trust with vocational rehabilitation that you're serious about your business. But your own contributions can be that extra source of capital. Individual development accounts are run by nonprofits. It's a state of Oregon funded program matched with federal funds or other funds, but you can get up to 3 to 1 for every dollar you save in these programs, and that can be a source of outside capital. So it could be that this is something that you get 9 months from now or a year from now, but it can count toward an outside source of capital with VR. Microloan programs, it's not too many of these around the state these days, but if you need a few dollars from a loan, this could be a way to go. Kiva Zip, I'm a trustee, and I know there are other trustees out there. This is a great program, no fee, no interest loans for 2 years. Basically, you don't get a credit check. There's kind of a financial check that they'll do, but you crowdsource these funds, which is great. And related to that, these are other crowdfunding sources: Kickstarter, Indiegogo, Rocket Hub. There's actually over 300 different sites now, but these two can be other sources of capital for your business. You definitely want to connect with your local small business development centers or SBDCs. They're good liaisons to the state, and they have a good sense of other funding programs. And then, of course, check with the state. For Oregon, it's Business Oregon. They have some additional loan funds. There are others. I know everybody wants grants. Grants are hard to come by, and they typically don't do everything you want, but you can look for them. Loans are more accessible, but they're also more challenging to get. The whole thing is just challenging to do. So I think work with your QBE on this. They should be a good resource for trying to identify these. But remember, Voc Rehab does not want to be the primary source of funds for your startup, and you're going to need it, especially for working capital. Oh, and nonprofit grant programs. That means the nonprofit has got some funding from a grant source that they have, and they're passing that through. a question that I'm often asked is, well, how much can I ask for? What you want to do is, first of all, you want to let your startup dictate what you need. In other words, if you've really looked at your business plan and its projections, what do you need to reach that break-even point? That's really what the startup costs should be focused on, is helping you to make that happen. That said, people ask, well, how much can I receive from VR? Well, there's good news, bad news there. The bad news, or let me give you the good news, is there's not a limit per se on what you can ask for, but there are limitations. And it goes like this. Up to $10,000, a counselor and a branch manager and the SE committee are what you need to approve a request. So if your startup costs are under that, those are the folks that are going to have to say yes to your proposal, your business plan. If it's more than that, you can add the administrator for VR on that list. So obviously the under 10,000 are going to go faster and smoother. The over 10 are going to go longer. I think, again, if your startup needs it, you ask for it. I think if you can fund or ask VR for less than 10,000 and get the rest from outside capital, that's better. I think if you can get a lot from outside capital and ask for VR for very little, that's going to be the best case scenario. VR is meant to help. It's not to me the silver bullet or the one answer to your startup issues. It's supposed to be there to help you to become self-employed. But there's no limit on the amount, but you want to use your judgment here and, look at what you're up against in terms of how many people have to say yes to it. Last thing is, and this is just me to you, a word to the wise. It's not all about the money. And again, I've been around long enough to see both business loans and grants when they're given to clients. You're not going to have any problem spending money. Most people don't. And the startup costs typically vaporize within days. The real question is, what did you get for your money? And that's what I want you to think about. Because after you've got the money, if you didn't really have a plan or if you really didn't spend it wisely in the right places, you are right back where you started from, no better off, because you don't have a way to get more money in the door. It's what you build in terms of startup costs that really matters. How you build a business that generates revenues, how you build a business that acquires clients and serves their needs, how you get a business that provides quality products and services. It's what you build that ultimately matters. It's rarely about the money. The money is a means to an end. So I want you to think about that, and this is my rule. Businesses must make more money than they spend to survive. Don't start a business that breaks this rule. That's what it's all about. Your startup costs are a means to get to a business that does this. That's what it's all about. Okay, that's the module on startup costs.